Check out Tesla dropping below $200 a share for the first time since last May, and the chartmaster says the electric automaker could be due for even more losses. Carter Worth joins us now. Carter.
Yeah, I even think maybe it's not could, but is due for more losses. Let's look at the charts. I have 7, I believe. Sounds like a lot, but they're all the same time frame. So here we go. There is a chart of Tesla, basically 2-3-year chart. No drawings, no lines, no judgments. Let's put some lines in. So what do we know? We know that there's a well-defined uptrend line. We broke trend, and then we rallied back to the underside of that line, hit our head to the penny, and then basically straight down over the last 3-4 weeks. Look at the next iteration. What this tries to point out is the authority of that line. So the line was support, and the stock kept bouncing off it. But once you undercut that line, it becomes a level of overhead supply or resistance. The arrows annotate that. Let's draw the lines another way. So here's the down arrow, and that's key. Are we going lower from here? Here's why I think we are. Look at the next iteration. This is as well-formed a topping out formation as you can find. You can call it a head and shoulders. It doesn't matter what you call it. We know that the stock peaked before the stock market, and today it made a new 52-week low. Not many stocks in the S&P did that, only a dozen or so. That's a problem. Let's keep going. Next iteration. Look at those lines on the way up and on the way down. Those are perfectly symmetrical lines. Tesla has hit those lines repeatedly. Last and final iteration, basically, what do we know? The stock is breaking below its June lows. The market is above its June lows. Only a few stocks are as bad as this, but given its size and its constituents, it's beloved, I think it's a big problem.
Carter, thank you. Carter Braxton Worth of Worth Charting. Guy, I'm going to bring back an old line fast money game that we used to play a long time ago. It was called higher or lower. I know that you remember this. So Tesla, higher or lower based on what the chartmaster just laid out.
So if I think the stock is going higher, I say higher. That's the correct way to play this game.
I think this is why we got rid of it.
Lower!
Yes.
Lower!
Yes, that is how you play
Lower!
it. Okay.
Lower. And we've been saying, listen, it's not like we just said this, and we've been saying it for a while. The stock's now 50% off its all-time high, and I think it's headed to 175. We've been saying that for a while, so lower, Melms.
Bonawyn, what do you think?
Lower. Lower with a question. Does this mean this is a leader to the downside, or is this the bottoming out that people are looking for a rally?
What do you
Is
say?
that a new game? I'm really confused. All right, listen. I think all right, here's the thing. I think it's going lower because I think these are Tesla shareholders voting with their shares. Elon owns 15% of this company. Then I look at Vanguard, BlackRock, Capital Group, State Street own about a 20%. So think about that. Those are really concentrated holdings, about 40% or so. I doubt they're selling, but a lot of other people, a lot of these disciples who are in it for the Elon trade are peeling out. They're watching the CEO of this company all day spending time on Twitter, tweeting stuff that is actually alienating potential Twitter customers. And then let's not forget all the issues that they have with China, zero COVID, access to rare earth materials for their battery. I mean, the list goes on and on and on. This is probably not only one of the worst looking charts in the entire stock market, it's probably right now, one of the worst fundamental stories too.